Hello. So it's been a while since I posted a video here on YouTube and other platforms based on educational purpose. And today I'll be talking about the directional bias structure based. And I've seen this as a big and a bad disease to most of the traders. And mostly it's my student. So I'll be sending to my students as well. But in case this is one of the things that makes you uncomfortable for not understanding the structure, I got you. But before we proceed, we need to understand that the directional of the market is first observed from the monthly and weekly time frame. These time frames are called the major constant time frame. Major constant time frame, TF. And on this major constant time frame is where we find what we call the bias. But from 4 hours and daily, here is where we find the minor trend. Minor trend. We find the minor structure, the minor trend. We call them the trend, the minor structures. Here major structure, here minor structure. And one thing I'd love to address is I've been getting a lot of questions based on the classes. Just as I said it earlier from the previous video, the classes at the moment, the group-wise classes at the moment will not be available until further notice. I said at least it will be maybe May. I'll be having those classes June, but at the moment the classes will not be available, group-wise classes, but for one-on-one I'm still available. But for those who needed the classes, maybe I could help them with some course videos instead of the classes. Maybe you just grab the videos and observe, and I'll just give you the opportunities to ask some questions, and these videos will cost $15. So in case you're interested, maybe you can check the link on my description there on the description video. You'll find the link of Telegram and Instagram. You can contact me so that you can get these videos. But for classes will not be available. Group-wise, I mean. One-on-one is available, but for the group-wise classes, it's not available. As I said, I just need to take some rest because I've been teaching a lot of students for the past few months, almost 100 students. So I'll be yeah. So that's it. So if you in case you need the videos, then you can check me for $15. Then you can get the videos, the full course video. So let us proceed with the lesson. We'll be talking about the monthly and the weekly for the buyers, but for the 4 hours and daily, it's only for the trend. Things that to be considered, we consider the validation of the structure and the invalidation of the structure. So whenever the structure is validated, we need to understand that this is the continuation, it's the valid continuation. But whenever we invalidate the structure, it's simply for the reversal. I think I talked about the midterm structures somewhere in the video, so I'll be putting the link also in the description. You need to make sure you observe the video first. So how are the structures being validated and invalidated? Whenever the downtrend is broken or price closes below, this is what we call the validation. And whenever the high of an uptrend is broken or price breaks, call it the validation. But whenever these highs, the opposite structures are broken, so for instance here, whenever the high is broken, yeah, we invalidate. See my price here, whenever the low is broken, we invalidate the structure. So if you just understand such kind of thing, you know, validation is simply the continuation, while the invalidation is a reversal. That's it, and that's what you need to understand. So you need to now to align the weekly, monthly buyers and the 4 hour, daily trend, they all need to speak the same language. So if here it's bullish, then also here you need to observe the trend and bullish. Okay, so if here is bearish, we need to observe the trend as well and bearish. So if you don't have any bearish, so if these here is bullish and here bearish, there's no need for us to be taking the setup because it's already a contradiction. So we don't want to mess up our trade. There's no need for us to be taking the trade because once here the strongest time frame is bullish and the weaker time frame is bearish, once price meets, let's say, an area of liquidity from the strongest time frame, eventually your bearish structure will be violated. So we don't want that to happen into the market or into your trade. So we want to trade in that, direct proportional to every structure. So for instance, here the bullish trend, the buyers must be parallel with the trend. That's it. So if they are not parallel, then you don't have to trade it. Are we clear? So you observe, let's say you observe the buyer's price has been validated for continuation. Go to the 4 hours or daily. Look for the trend. We need to see also the trend validating the structure. That's it. So once we see the trend validating the structures, we all have the bullish scenario. So both are talking the same language. So once they speak the same language, there will be no misunderstandings. They will be understanding each other. And that's what we get a strong, let's say for instance, it encounters an area of liquidity. It will be easy for us to get a strong push to the downside. So without wasting the time, let us easily go to the charts and observe what's happening here. So for instance, here we have the USDJPY. I think I'll be doing like 4 pairs, if not 3 pairs, just to save time. And for the traders, you need to understand that we are trading current price action and we are trading the most probable setup. We don't want to trade things that are complicated from your side. So you find people trading the past. So this is the past. You are trading this structure. This is the past. What we want to trade, just want to trade at least the candles that are formed well. This is 3 months. It's also like the past, but not that past. So if you go to weekly, you will clearly observe on weekly time frame, we do have what we call the clean structure. For instance, let's talk about 3 weeks ago. What happened? Once you found the structure has been validated this way, let's say this is our present, because we don't want to stick what happened here. We want to stick with what is happening here, or what happens here, or what happened here on the last week. So that's what we want to stick with. Then after we have found, so we need to go on daily to see also structures have been validated. So the nearest structure that has been invalidated by the price is this. Oh, sorry. Is this structure. Let me just clear this one. Sorry. Okay. The nearest structure that has been validated is this structure. This is just the trend. So the trend, the nearest structure that has been validated is this one. And also this is the minor, but we have the major. So we have the minor and the major. So this one is the major and this one is the minor. And they're both an areas of liquidity. So if these are the areas of liquidity, do we have any authenticated area of liquidity from the daily? If yes, then we will take into consideration. That's the thing that you need to understand. This is our type 1 authenticated area of liquidity. I think everyone remembers about the type 1 authenticated area of liquidity. It needs to be on the level here. As you can clearly see, it needs to be on the level, and it's on the level. So which means it's okay. But do we have any other authenticated area of liquidity apart from the type 1? You can clearly see we have a zone. I think my student understand about the zone. So if we have the momentum breaker on the zone, We need to go on 4 hours to observe also if the momentum break is there, which means before the type 1, we have the type 3 authenticated area of liquidity. So which means we have two areas of liquidities that whenever price will be approaching that, we'll have to get the fuel to drop more, it will encounter those areas of liquidity that are near to it. And that is what you need to understand. So which means price will have to come here, then drop the downside. It will react to the recent area of liquidity that is authenticated. And that's how easy it is. So which means this also, once we go on 4 hours on a trend, we see it's the type 3. It's the type 4. You understand about the type 4 area of liquidity. It's an area of liquidity that comprises with multiple areas of liquidity. So you need to understand that for the students, they know. So let us play out the price and see how did it reacted on that area of liquidity. So which means we are expecting that price to tap this area, then drop to the downside before reacting to this one, because first we have the type 3 before the type 1. So we won't be trading type 1, we'll be trading type 3 on its way down. You can clearly see. So the reaction from this point, so the setup, if you got the setup from this point, was more clearly compared to the one that if you could have bought. So let's say someone could have decided to buy from this type 2, eventually taken out. But you can clearly see we have another type 3 here. That was the best for the price to drop to the downside. Okay, so first entry, second entry, price drops to the downside. And that's how easy you can scale your trade from weekly, from the bias to the trend, and define it maybe to 1 minute and so on and so forth. That's how easy it would be. Let me talk with let me talk for okay, another BTC, one of the trade that I managed to capture. The trade up here. Remember, we are trading the present. That's what we are trading. We are trading the past. What do we see on the present? We see price has validated the structure. That's how easy. Also an authenticated area of liquidity from the weekly time frame. So someone might consider this as their entry point, but before considering that as your entry point, we need to understand what do we have. Do we have the trend also bullish or bearish? 4 hours and daily, we can clearly see that the trend is also bearish. Why? Because once we observe the structures on daily, price is also closing below. But do we have any authenticated area of liquidity from the trend? Of course, yeah, this is one of the authenticated area of liquidity. Sorry. This is one of the authenticated area of liquidity. We can trade it as the type 2 authenticated area of liquidity, but we have the type 3 above that price has occurred. So it's either price to react on the general type 2, this one, or to react on the type 3. So which means the type 3 is just below from the type 2. So we will be waiting. So let's say the type 2 from the 4 hours time frame, we need to observe it. Yeah, this is the type 2 from 3 hours time frame. From sorry, the type 3 from 4 hours time frame. And that's how easy now you can scale your trades. Remember, we came from weekly time frame, and we expect that price should have it needs to tap here, then proceed to the direction on the downside direction. So let me play out the price here. So you can clearly see the price came here, and here I'm just talking about the direction and without refinements and the areas of liquidity. That's all. So that's how you can take your trade from the weekly time frame. Remember, the type 1, we haven't considered it from the weekly time frame. Same applies for the type 2. We haven't considered it from the daily time frame because the type 4 was the nearest structure before the all time frames. So was the nearest structure for the price to react. So price will always react to the nearest structure rather than the farthest structure. all the farthest areas of liquidity. I'm very sorry. So let us check the other one, the EURUSD. Let us talk about the EURUSD. Okay, let me just do this. Yeah. For instance, you wanted or you decided to trade this current price action. I mean, this week, how would you approach the market? We can clearly see the price here has validated the structure. Same price validated this structure, which means we have the shift and the formations. But price will not just come inside these formations to give you to grab the liquidities or the to grab the liquidity instantly. Remember, it's weekly time frame. So we need to go along with the trend on the bias and the bias as well. So the bias is uptrend. The bias is bullish. The trend, we need to observe it either on weekly, either on daily or the 4 hours. For the 4 hours, we can clearly see here. The daily, we can't see it clearly, but the 4 hours, we can clearly see here. We have the type 3, one of the best entries that I normally consider and my students understand. So if we have the type 3 and the price has already validated the structure, we are trading it easily. We are trading it easily to the upside direction. That's it. Without refinement. Remember, I'm just showing you how we can be trading such kind of structure. So that's how easy you could be trading these kind of structures. So everything will be reacting. Same applies again here. We have another type 3. This one is another type 3. Easy. So if the wick had opened, you could be easily taking these trades to your direction that you need. Another example, let me show you more examples from the structure here. The weekly time frame. Remember, you just trade the probable structures that they're on your side. For instance, let's say we could have considered this area as our area to take into consideration. So which means we have this one, price has validated that high. Before invalidating this high, we are trading the current price action. We don't want to trade the past. Daily, do we have any trend? Of course, daily, we see price has been validating the structures from the bottom. But about 4 hours, an authenticated area. So we are trading on the 4 hours and daily, mostly we find the authenticated areas of liquidity. So once we come on the 4 hours, we find this is our type 3 authenticated area of liquidity. And the student, they understand about the type 3 authenticated area of liquidity. Yeah. So from the type 3, which means price will have to come here, tap, then proceed to the upside. That's how easy you could have traded the type 3 and see. But before that, we had another. Remember, we are trading the bullish structures. We are not trading the bearish. Another type 3 here. But we have type 3. We also had the type 1 that I taught you. This is the type 1 that I just taught you here on YouTube as well and other platforms. So if the liquidities will fail from this type, if the liquidities will fail from this type 3, then price will have to come to type 1 to grab more liquidities to the upside. And if they fail as well, then price will need to find more liquidities. You see, so the type 1 price reacted here. Let me just do this. Yeah, type 3 price reacted here on this, gave some people some few entries. Price came again type 1 entries, then went higher, gave some people entries before dropping again to the downside to the same type 3 that was down here, offered some confirmation, published new structures to the upside direction. But before that, we had another type 3 here. Remember, we are trading what we call the authenticated area of liquidity, since we already know that our bias is bullish. So anything that comes after it will be tradable as the to the correct direction of the market. And that's all that you need as a trader. That's all that you need as a trader. There's nothing much that you need here to take into consideration. So if you can backtest on any, just go on your time, search on any pair, then backtest it. You'll find what I'm talking about. You will just see what I'm talking about. It's once you understand the structure, you understand the bias and the trend, everything will be falling to its, yeah, for instance, this one. This is one of the trade that I didn't manage to take, but let me show you. I think, yeah, this is one of the trade that I managed to take. I didn't manage to take it, sorry. I didn't manage to grab it because what we saw here from the past, not the past, just a week. This is how the week closed, the current price action. This is how the week closed. We go daily to look for the structures, the authenticated. We don't see any authenticated, but we see it's bullish as well from the 4 hours and from the daily. But on the 4 hours, we see we have an authenticated area of liquidity. This is our authenticated area of liquidity. This is the trade that I expected to take it, but eventually I missed it because I was not available on the chart. That's it. This is type 3. You can clearly see. Price came there, tapped, and proceeds to the upside direction. Another one was USDJPY, I guess. Yeah, this one. Same scenario. What do we have? What do we have here? We see price closing above the structure from the previous week. What do we have from the present? We see we have the price closing above the structure. This was not here because I just saw the price somewhere here. What do we have on 4 hours? Authenticated area of liquidity type 3. Then I was just waiting for the price. I'll be showing you the screenshots as well. So the price came into that type 3, then proceeded to the upside direction. Some of the trades that I missed, let me show you some screenshots, the ones that I considered earlier before the price. I didn't manage to grab the entries. Yeah, just a little quick. So you can clearly see this was the trade from EURUSD, and this was from Euro and ZDD that I just showed you. EURUSD, and this is Euro and ZDD. You can clearly see the screenshot. This was 10th of March. See, same price here, 10th of March. And unfortunately, I didn't manage to grab the entry because I was not available on chart. But this is how the market went. And this I consider the confirmational entry. I also missed the confirmational entries because I was waiting for the price. You can clearly see. So that's how you can easily analyze the chart by just considering well the structure. If you understand the market structure, then it will be okay on your side. So that's it for today, and I guess I'll be posting more videos this week, maybe if not the coming week. I hope this will be a wonderful class to you and you'll be able to understand the market structure or the directional buyers in an easy way. Thank you and enjoy the video.